Well, sorry about that. Had to readjust the camera. We're back on the northern edge of Riverside Drive, but to be honest with you, it's a whole different animal in the daytime. My last video, we just did a little bit of history. Maybe we'll see some more. I suppose I should go the speed limit, which is a little higher than what I'm going. Hanging out in the left lane like I am. This is why I hate spring and summer. It just stays sunny way too late. Well, I should probably think of something to talk about. I didn't learn a set of songs this week because I didn't really know what I wanted to do. And then by the time I thought about it, I'm like, oh, it's I only have 2 days. So there's that. Oh. So, okay. So apparently some streamers I was watching last week were all a bit nervous watching the markets collapse. Which I don't know how much they collapsed because as far as I can tell, they're all pretty much haven't changed more than, a few percentage points one way or the other. But they were all worried about it. And I don't understand this mentality, so I will say I am not a financial advisor. This is not financial advice. You need to find a licensed fiduciary, blah, blah, blah. All that stuff. But I don't worry about financial collapse. If indeed the markets crash, that's when you buy stuff. Not a big deal. And just on a personal finance level, this is how you go about it. First of all, you need to make sure you have an income stream that is greater than your outgoing bills. It sounds crazy, but if you make more than what you spend, you're in pretty good financial shape. Secondly, if you don't make more than what you spend, well, that's a whole world of shit. And, maybe we'll stop by that place on the way back. Anyway, so if you're in that position where you don't make as much money as you actually need, you need to get out of that. Whatever you got to do, either cut costs or make more money. And sadly, the more money you make, the easier and better it is to be able to invest and make even more money. It doesn't sound fair, but it is. So anyhow, so there's that. So once you've got yourself to a point where you make more than what you spend, and I don't always take my own advice here, but this is the smart way to go about it, then you save up a nice emergency fund. And that should be equivalent to about at least, in the beginning, at least 2 months worth of bills. So if you pay $2,000 a month in bills, just to say, then you're going to need about $4,000 stacked up just to sit around. Now, of course, you're not going to be expecting to be jobless for 2 months, but that's going to help you take care of unexpected cost. And you should always be trying, really, you should get out to the point where you've got 6 months worth of savings. Because at that point, a car breaking down or things like that aren't really going to bother you too much. Wow, look at those purple trees. Oh, I like them. Oh, Mr. Speedy Pants here. Anyway. He should really just sit back and enjoy his beautiful roads. So get that savings saved. And once it's saved, you can pretty much, you can start dividing that up, putting your money in different places. So that way it's not just sitting in your bank account waiting for a rainy day. Put it in a market account. Put it in a short-term bond. Things that it's still liquid enough to where if you need the money, you can withdraw it, but it makes a little better interest rate than a typical savings account or checking account that makes none. Let's just have a look-see down here. But the point is, save your money, and life will be better off. Once you've got some of that emergency savings up, this is when you get into the investing. Look at this cool boat dock, a little marina out here. Twin Rivers Bassmasters, it says. Just look at that. Look at that nice river. I know Tom Pinoid would appreciate that. I could tow a boat, but I'm not going to. Nice Toyota 4Runner, dude. Anyway, they're just sitting by the dock of the bay, watching the time go by. Anyway, so then you get investing, right? The first thing you need to invest in is opening an individual retirement account, an IRA. Now, I don't really care. We don't have to get into you can gamble on taxes being lower now and later. That's where you get into your Roth and your standard. Just assume that whatever tax structure that we have now probably won't be the same later, or it might be better. You never know. Most likely not, especially if you're going to vote for Democrats. But I digress. The next thing you're going to want to fucking do is open up your IRA. Now, in your IRA, you're obviously assuming for a long-term growth, assuming you're starting one in your 30s or, 40s. So you're looking at a time horizon between, and a lot of this depends on what your financial goals are. I should mention that. So if your financial goal is to put money in the market and not have a job and just live off investments, Well, I hope you're starting off with about $2 million to put in there, because that's what it's going to take to, on the bare minimum, just to have an income that's that good, that's high enough to actually sustain your bills. Oh, I should mention the other things, and I should take this advice, is you need to buy life insurance, term life insurance, to protect you from loss, health insurance to protect you from loss, because you can save up all this money and then get sick and all your savings are gone to shit, which that might happen anyway, but at least you got some padding. And honestly, I haven't taken that advice yet. I'm still uninsured, but oh, look at that. Oh, I wish you guys could see some of this stuff. I need to get Jeff Holiday to send me his super special 360 camera. There was some cool little outflow with some ducks there. But once again, I digress. So get your insurances, set up, and because that'll help protect you from unexpected loss of income or loss of savings. But all in all, and the river is really high up here. It must not flood very often. But to get to the nitty gritty and why you shouldn't worry about the way the markets move is this. Once you start investing, you got your IRA, set up a brokerage account. You can say we're going to use Robinhood if you want to be an amateur about it, which is fine. I mean, Robinhood actually does have its purpose. I don't use it because I'd rather just buy whole shares of things. If I can't, I would like to buy, say I want to buy Lowe's, right? Lowe's is around about $100 a share at the moment. And I don't feel like spending $100 on a share of Lowe's. It's just, I don't want to lose $100 if Lowe's were to go completely, tits up. So I haven't bought a share of Lowe's. Now, if I had Robinhood, you could buy a fraction of a share, buy $10 worth of that stock that's $100 and whatever. And that's good for what, and that probably will be the thing that I set up a Robinhood for, is to buy the blue chip stuff that's got a higher price. But it really doesn't matter. So whenever brokerage account you've set up, what you want to do is say you're going to I'm going to set up a brokerage account, and I'm going to put $100 into it, right? $100 to start playing and doing my investing and my trading. So what I want to do with that is take my $100 and I want to divide that by the different asset classes that you can own. Stocks, bonds, mutual funds, exchange traded funds, things like that. So now if you have a really long horizon of investing, you're probably going to put most of your money in stocks or ETFs or mutual funds. Mutual funds and ETFs, because those typically have the best returns, even though they are riskier. The risk over time is very low. Open to freshwater road after heavy rain. Huh. But anyway, so you want to divide that up and allocate your money. Let's say you put 80%. It really doesn't matter what your ETFs and all that stuff is made up of for, instructional purposes at the moment. But let's just get into your stocks, right? So I got $80 of stocks I want to fucking buy. So what I'm going to do is I'm going to pick the 9 industries that stocks have. So you have like, well, let's just make up your fucking categories. There's healthcare, there's this and that and the other and all kinds of shit. And what I'm going to do is I'm going to go into each one of those categories. So like say one is industrials and another one is technology. Whatever it is. And I'm going to say I got $80. Let's just, for easiness sake, got $80, and we're going to pick 8 different asset classes or industries to get into. So I'm going to put $10 into each industry. Now you can go about this. Now realize that this is the one place where diversity is a strength. So say I want to buy, we're going to just industrial shit like factories and stuff that makes things, whatever. Banks. Let's go with banks. That's a good one. And let's say we have all kinds of banks that are listed publicly. Well, I've got $10 that I can fucking spend. So if I can buy a share of 5 different banks at $2 a share, well, now I've got 5 different banks, two, whatever. I've got those number of banks. I've got 5 different banks. I've got $10 invested total into that sector, into that industry itself. And then I go on to the next one and do the same thing. So you want to buy stocks that if one of them goes to, once again, one of these stocks goes tits up, no big deal. And then you go into the next sector, and the next sector, and the next sector. So eventually you have, 40 shares or 80 shares of various companies that are like $2 a share. And now you're diversified across the entire spectrum of investments that you can have. And your risk of losing any given one, I mean, they might go down, they might go up, it really doesn't matter. But now you've got 40 different companies that you've invested in, and you'll have little bits of returns there and little bits of losses there, but it really doesn't matter. It'll probably balance out. And then you can go into like even hedge those bets even more. You can go and buy, you can go buy inverse funds, right? Which is basically a fund that the guys take the money and they do all the shorts and the margins and all that shit, all the risky shit that you can get some exposure to that, which is what you want. But you don't want to be in a situation where you short a stock and it goes up and you're fucked. That's not how you want to go about that. You're much better off just putting it into a fund where if the fund goes tits up, well, you lost your $20 or however it might have been, but you're only losing like 1 or 2% of your overall assets. Worst comes to worse, and if a bunch of stuff went up and your short ETF fund went down, chances are that there are stocks that you own in various other places that have also gone up and probably went up to a greater amount than what you had. So it's all about managing your risk by basically being everywhere and hoping that overall, over the 20 or 30 years that you might be investing, you're just basically trying to outpace inflation and earn dividends and using that to, and most likely you'll probably get lucky and just kind of stupidly get into an IPO situation where you buy some company that all of a sudden blows up. And everybody likes that. That's the exciting part. anyway, you basically just repeat that process over and over again. And when your stocks go up, you sell those stocks. If they go down, you just hold them. If they go to zero, you just chalk it up. Maybe you sell it if you really want to get out and you know you need to get out. But basically do that until the point where you can start another, well, you can even do it in the same brokerage account. If you want to start playing around with some of the more riskier day trading and stuff like that, but you want to make sure that you're doing your risky stuff on the margins. Like you want to risk the money that you've already made. So if like I bought a stock and it paid me out a dividend of $5 one year, I might take that $5 and try and gamble on some other shit that's more riskier. But otherwise, you don't want to go after your principal. You don't want to eat away the capital investments that you're putting in. And that's all I have to say about that. Trying to think of what else I was going to talk about. I had a whole list of shit. Aside from finance, personal finance. Which I have to say, probably didn't really tell anybody anything they didn't know already. But I think a lot of guys that are out there doing this investing and trying to be day traders, I think they're going about it a little bit ambitiously, and it probably won't bite them in the ass too hard, but man, they're going to sweat a lot over it. Bah, 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 bah. Yeah, I think I can make this turn. Yeah, got enough time there. Let's go down the same old road that we've been down before. So honestly, it really was a beautiful road. Well, I think most of the happenings have kind of quelled themselves once it got around that it was a very justified happening. So that's good to see. Drive right into the freaking river right there. No problem. Check out this little park. See what's over here. Nothing too much. Nice view of water. So that's cool. A man and his son going fishing. Probably a guy living in this van. Oh, so let's talk fucking landscaping. Actually, I'm going to end this one, and then we'll talk landscaping.